It's Sunday, the 12th of March, 2017. This is a chart discussion for the GDXJ Gold Miners ETF. The GDXJ is something that's often sort of not talked about by a lot of gold mining investors, but I think it's something that really needs to be understood if you're going to be playing in the ASX junior gold stocks, because this is having more and more of an influence on their trading patterns. So the GDXJ holds about $6 billion worth of gold mining shares. Qualifications to be a stock that is held by the GDXJ are it's traded on one of the notable exchanges, mainly in Canada, US, and Australia. It's got to have a certain daily turnover of about $1 million, and it has to have a market cap of about 150 million US, and has to have held that value for maybe 6 months. So the GDXJ actually holds upwards of 10 to 15, and in some cases almost 20% of the small gold miners on the ASX. So every day they're rebalancing their portfolio based on the inflows into the fund or outflows. So if the fund if people are buying more stock in that fund, putting more money into it, the GDXJ is mandated to go and buy certain gold stocks, the ones in the GDXJ ETF. And in the first couple of months of this year, this is a chart I've got. You can get this off the it's ETF.com site that I discovered the other day, and it shows the fund inflows in the last 3 months. So since the last rebalance, and I'll talk about the rebalance in a second, there's been $1.2 billion worth of fund inflows into this ETF in the last 3 months. So the ETF has expanded by about 20% in 3 months, which is just an extraordinary figure. And you can see here there's only really been a couple of days where it's turned down, where there's been outflows out of the fund. So that's in that time, a stock like Ramelius. I've got another. This is the holdings of the ETF. Now you can get this information off the Van Eck website. You might have to change the settings to be a US customer, I think, because it doesn't let you look at this if you're in Australia, if you have the settings set to Australia. But you can see here a stock like Ramelius, which is one that I follow pretty closely and have held and still hold. They hold 100 million shares of Ramelius, and that's 0.85% of the total value of the fund is in Ramelius. Now, that equates to almost 19% of Ramelius shares. So they're a huge influence on this market. And in the first 6 months of this year, in the first 3 months of the year, that's increased from about, I think, less than 14 or 15% at the rebalance to 19% of Ramelius stock now. So they're an incredibly important driver of share prices. So I think that's, they've probably bought $10 million worth of Ramelius stock in the last 3 months. $10 million worth. So that's a lot of shares that are being bought, and a lot of people. This information's all public, so a lot of people front run this. Hedge funds, algorithms, all that sort of stuff is involved here. So this is an incredibly important driver of stock prices now. I guess the thing is, it's kind of ignores the fundamentals, because there's a lot of rubbish companies in that ETF. That were once good and have since performed poorly, but are still in there. So the good companies and the bad companies all move up simultaneously, I guess you could say. On the chart itself, the GDXJ is also a very important charting tool. I think a charting symbol to follow, because it's the sentiment of that whole junior gold mining stock index, that stock space. You can see here that the GDXJ itself was up 200% from the low to the high in August last year. Now, if you look on the chart, there's a few sort of interesting things. I've been looking at this recently because you can see here, if we look at this key level, this December low, actually corresponds to a kind of a long-term lows in this 2014 area. Obviously that we had the bigger low in 2015, but this level is important around this 27, and also the other level that was important is right where we were this week, sort of around this 32, And you can see that's corresponded to 1, 2, 3, sort of 4 hits, long-term sort of bottoming action, I think. So I thought it was important this week that it held that level, because if it didn't, it was probably likely to go back and test that December low. But you can see here, had big volume down, and that day there, that corresponded to that fund outflow I said here. So I think that was the 27th of February, and that was a day, coincidentally on that day, Ramelius stock, for example, was down more than 10%, I think. So, I mean, this is almost this correction has almost been a one-for-one correlation with Ramelius and with a lot of the other small gold stocks like St. Barbara or Silver Lake as well. But I'm encouraged by the price action the other day on Friday. It really closed up pretty well. I think the GDXJ was up 5% on Friday. Held this line at 32. My long-term sort of view of this is a really big head and shoulders pattern, inverse head and shoulders. And that's something that I've talked about a lot in these videos. It is one of the more reliable chart patterns. So I think on a yearly, monthly sort of time frame, this looks to be a big sort of head and shoulders bottom forming. You might be able to see it a little bit better, even on the weekly you can't really see it, but potentially on a monthly it sort of looks a bit more obvious. So it was important that it held that level, because I think that means that we're still sort of in that bottoming phase. Obviously this index is down, it's down 60 or 70% still from the 2011 highs, so there's a lot of room to move here, and it shows how oversold this area was, or I guess how overbought it was back then. But the reality is that it shouldn't be this low, I think, and on sort of long-term valuations, you'd expect it to be a lot higher relative to some of the other stock indices and valuations that you can use in markets. So yeah, I just thought I'd give a little bit of a mind dump of what I've been talking about in the GDXJ, because I've mentioned a few times on Hot Copper, and there seems to be a bit of ignorance on the topic, but it's a very important index to follow. The other one is the GDX, which is the larger gold miners ETF. So that's companies with a valuation of over, I think over 750 million US dollars, and has to have a higher turnover as well. It's a pretty similar sort of chart, but the juniors, I guess, are what I'm sort of focusing on more, because that's where most of the stocks on the ASX tend to fall. I think there's only 4 or 5 companies in the GDX. There's Newcrest, obviously, St. Barbara, Northern Star, Evolution, Saracen, and I don't think there's any others. There may be one or two more, but that's another index to follow. And the importance of these indexes is that they're very liquid. The GDXJ turning over, I think, about $100 million a day, 100 million US dollars a day of stock in that ETF. So and the GDX, I think, is even higher than that. So these are a good tool to look at to really gauge. I mean, gold pricing can be a little bit difficult itself, and I know most people are only investing in the stocks rather than the physical gold or contracts pricing. So yeah, the stock indices are a really important driver of where the market's heading. So it gives you a look at that. A lot of these are Canadian companies as well, so you can sort of get a better picture of how things are moving in Canada and the US. But yeah, that's just a general overview of the GDXJ and the GDX, and something I think worth following if you're interested in that junior gold mining area of the market.